Hello, everyone. I'm so excited to welcome you back to another episode of our weekly series where we will be delving deep into the world of price action based technical analysis. I do hope you all had an amazing week. Today, we are going to be dissecting the XAUUSD markets, and trust me, there's a lot to unravel. The financial market has been buzzing with speculations as many believe that the Fed won't be raising rates this week. This expectation is fueling a surge in safe haven flows towards the gold market, as we all saw on the last trading day of the previous week. What happened? The week ahead promises to be nothing short of thrilling as we eagerly await the Fed's interest rate decisions. And you can bet that market sentiment will be in a constant state of flux as we inch closer to the big day. But before we jump into the details here, let's take a moment to reflect on our recent trading performance. Despite a bit of a rocky start to the week, as you will see in this commentary, we managed to secure over 600 pips in our favor through multiples trading entries throughout the course of last week. A big round of applause to all of you who joined us on this profitable journey, and for those interested in revisiting this commentary for educational purposes, you will find the link conveniently placed in the description box below or at the top right hand corner of your screen if you're watching on my YouTube channel. In preparation for the new trading week, I have conducted an extensive analysis of the current market conditions using simple yet powerful tools such as trend lines, key levels, and chart patterns to gain insight into the historical movement of the gold commodity market. Before we proceed, please remember this video serves as an educational tool and not to be considered as a financial advice. My mission is to arm you with profound insight into the XAUUSD chart and enhance your proficiency in price action analysis. Remember, Forex trading comes with inherent risk, so tread carefully and consider consulting a professional financial advisor before making any investment decisions. With our foundations family in place, it's time to dive into the business for this week. So we are going to be delving into the daily time frame as usual, where we shall be looking out for structures and patterns that will be giving us an insight into what our decision is going to be like for this week. Now, on the daily time frame, we still have the same setup as we had last week. There is nothing that I've changed here really, but I only have a little bit tweak into my key level. So I would like to do a quick recap of what we talked about the structure last week before going deep into what this structure is looking like. Now, the first thing we observed last week was the fact that we had an uptrend continuation pattern in the form of a falling wedge, which I duly highlighted here on last week video. So we had something like this price action after that impulsive bullish move. Within the last 3, 4, 5 months now, price action has transitioned into this interesting uptrend continuation pattern. And of course, normally when we have this kind of falling wedge, we expect from a technical standpoint the price will be breaking out of the resistant line of that descending trend line to inside an uptrend scenario. Now, with that being said here, there are other couple of things here that are screaming a potential uptrend possibility here. Now, the second one here is the 1,900 zone, which has been a formidable demand zone since the month of March. In fact, since the beginning of this year, this zone here has been strong buying niche for participants in this market, as you will see here. So every time price comes into the structure, we saw at every point in time buyers come in to take over the market from the sellers. We saw what happened here in June. Fast forward into the month of August, we saw what happened around here. And in fact, during the later part of last week's trading session, we saw our buy pressure resumed around that area again. Now, this for me is a sign that buyers still have a say in this market, and that 1900 area is going to be serving as a formidable platform for a potential uptrend continuation, unless the market state otherwise, where the breakdown of that structure is likely going to be inciting a bearish move. Now, to guide our trading decisions for this week, I have identified a key level around the 1925 area. And in fact, if you look at the structure closely, it has been a major determinant of price action since the beginning of this year. And what makes this level more interesting is the fact that it also shares a confluence with that descending trend line that we have here. So what this simply means here is that if price will break out of that key level, it would have also broken out of that descending trend line, then we shall feel comfortable in looking for buy positions. Now, in order to help us guide our decisions for this week, I was able to identify a simple setup on the 4 hours time frame, which I think we can use to position ourselves ahead of the new week. But before we go into the 4 hours time frame, I would like us to run through the economic calendar. And for those who have been with me for a while now, you know how important this is. The economic calendar has fundamental factors which of course often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that can make us position ourselves in such a way that we can capitalize on that potential move prior, during, and even after this event. Now, on the economic calendar, in the case of the gold commodity in this case scenario, we shall be focusing on high impact events from the US economic docket. Now, for this week, we have, in fact, it's a very important week, of course, and the first event wouldn't be coming in until Wednesday, September 28th. And on that day, we have a series of events here. We have the Fed interest rate decision, which is the most important one everyone in the market is looking forward to. We have the monetary policy statement, we have the FOMC economic projection, and of course the interest rate projections, after which we are going to be witnessing the FOMC press conference where the Fed chair will be following up with the interest rate decision, providing insight into the central bank's economic outlook, policy decisions, and the rationale behind these decisions. Then on Friday, we have the S&P Global Manufacturing PMI and of course the S&P Global Services PMI, another high impact event that will be giving us an insight into the health of the US economic docket. Now, as technical traders, what we are going to be doing now is to sniff through the current market structure to see how the market participant will be anticipating this event. Now, going back into the chart and scaling down into the 4 hours time frame, this is what I was able to identify here. So what I did on the 4 hours time frame was to take into consideration the nature of price action since the mid-month of July. And it's quite clear that price had consistently found lower highs, and as a result of this, I was able to connect a series of lower highs, giving us a beautiful descending trend line, the parameters we shall be using to guide our decisions for this week. Now, despite the lower highs in this market, it is clear that sellers are struggling at this point in time, as you will see that the lowest point since the lower highs began was around the 1885 level, and the last time price touched this level was in the month of August, and since then price is yet to come into that area. And the next one we saw, the next attempt by the sellers to come even closer or breaking down that zone, was price coming to test the 1900 zone, which of course we identified on the higher time frame as a very key factor in determining a bullish momentum. And we saw what happened. We have a higher low in the market, and whenever we notice a higher low, it's a clear sign that buyers are gradually gaining momentum behind the scenes. Now, with this scenario here, we can see that during the later part of last week's trading session, price action gradually approached that as descending trend line, which interestingly shares a beautiful confluence with that 1925 level, which we identified on the daily time frame as our key level for this week. Now, you would agree with me that price is right back at a critical point in this market where, depending on what happens around this area during the early hours of the week, will determine what our next line of action will be. Now, in this scenario here, if price will break out of the 1925 and of course the descending trend line, this will be a beautiful opportunity for us to capitalize on an uptrend move. However, if selling pressure persists below the structure, we might likely be seeing a scenario that could incite the downtrend continuation that began in the last couple of months. So these are my views here on the XAUUSD for this week, and trust me, I will be with you in the comment section of both my trading view and all my social platforms to give you updates on what I think is going to be happening in this market. If you have found this content helpful and useful in making your independent trading decisions for this week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial too. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.